Hey, welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a great day here today. This is the Closing Beats, just a quick show we do on the stock market. We go over the good, the bad, and the ugly, have a little bit of fun, and answer some questions if you happen to have any questions. I'll apologize for any noise ahead of time. There's a building getting built next door, so, strong economy, yay. It's making noise. Anyways, hey, by the way, if you want to play a game, you just go to that website, bottom right-hand corner of your page, called Guess the Dow. Just some fun we're having this week. Last week, I think, was the most amount of submissions we have had, so people taking their shots here. This week off to a good start. Basically, you just take your guess. Where do you think the stock market, the Dow in particular, is going to close next week? Closest without going over, we'll send you $100. It's a gift card. Our winner, Albert, last week was the closest at $27,189, so a gift card on the way out to them. And if you're one of our customers, I'll credit your account. Even if you have maxed out your IRA or Roth IRA, doesn't matter. I could still credit your account to $100, so there's a way to get a little extra money put to work for you. No strings attached. Just take a guess, and that's it. I promise you I will not send you one email unless you win. There you go. Also, Thursday, 2 days from now, we've got our class on a portfolio update, sort of deep dive into the market. We'll go over some studies and things in there. And of course, I'll stick around and answer questions for customers as long as they have them. That'll be Thursday night. Email invites will be going out shortly. Let's take a look at the markets here. We got the Dow down by 23, the S&P lost 7, and the NASDAQ lost 19. I sort of put it in the title of the video here today. The market was lower, and I think it was a little misstep by Mr. Trump. Let me explain. Love him or hate him, the consumer confidence numbers came out today. There's other stuff that was going on too. Everybody's waiting for the Fed. But consumer confidence numbers came out today. And, he gets to see that number early if he wants to see it before it's released. I'm going to guess he didn't look at it today, or somebody didn't give him the stats, because consumer confidence is a market-moving news event. And so we mentioned it yesterday. It's coming out today. It's a market mover. But when it beats, it's good. It's good for the market. But when it beats the way it did today, that tends to be extremely positive for the stock market. So consumer confidence came out with a double-digit beat, meaning we were expecting 125 point something. We came out with 135 point something, and it was a double-digit beat. That doesn't happen very often. Someone should have said to him, hey, you have the room for the markets to do well today. Average gain for the market is... Well, first of all, it's only happened 8 other times in history, right? So someone should have said, hey, this is sort of a great beat. This is a chance for you to go out there and motivate and inspire and get people all excited, and then pick on the Fed a little bit, and be like, hey, cut the rates. Let's keep this thing going. So 8 other times it's happened. Average gain is 1.18% on the day that consumer confidence beats by 10 points or more. So very rare event. I don't think anybody told him that, right? Because, he was kind of beating up on China this morning, beating up on the Fed. And the fact that he beat up on China early and said, hey, these guys suck. They're not buying our agriculture like they said they would, and that's China. They'll do that. It was really pretty abrasive. That sucked because it held the markets back. And you can even see when he tweeted how the market sort of sold off on that. And yeah, we recovered a little bit, but we finished negative. We shouldn't have finished negative today. I think some misadvice there. So Mr. Trump, if you're looking for someone to help you out with the stats and tell you when to keep your mouth shut and when to really bark, I'm happy to help. I'll support the country. Anyways, all eyes are on the Fed now. Basically, that's the way it's just going to go. Tomorrow's the big day. It'll be at 2 p.m. Eastern time, so it'll happen before the show, but during the day. And I'll give you some stats on that in a minute. The Bank of Japan decided overnight not to cut rates either. They shouldn't have, though. So the initial headline was, Bank of Japan didn't cut rates. Mexico wants to cut rates, but they're not. You didn't get any cuts by the ECB. They didn't cut, so why should the Fed cut? Well, Japan's in a different sort of situation. We're negotiating with them right now, and they don't want to be seen as weak. Also, their economy's doing fine, and they don't have as much room to, I shouldn't say their economy's doing fine, but they don't have as much room to cut rates if they decided to do that. So they're working on some other things, like maybe raising sales tax and things to generate more revenue, and I don't know. It's a whole thing, but it doesn't mean that the Fed won't cut rates tomorrow. There's a chance that they won't, but currently everybody's expecting a quarter-point rate cut, and we could finally put this behind us as of tomorrow. So we'll know and we can actually figure it out. I thought I'd share this with you. The S&P 500 performs the best on days when the Fed cuts rates. So if they do cut rates, we have the greatest probability of the greatest possible return. Average return is about 0.5% on the day that they cut rates. So tomorrow, if we're up about 0.5% or more, you'll understand why. Historical stats there. If you take every Fed day, it's a little misleading, right? So if you look at the Fed when they either cut, raise, or leave rates the same, average gain is about 1/3%. The problem is, over the last 10 times, we've been negative, right? So it's sort of a drag on the overall stat there. So we'll see. It's only been about 60% of the time that the markets are positive on whenever they do anything with rates, whenever there's a rate announcement. So a little bit of skewed data there, but we'll see. Tomorrow's the big day. We'll figure out what happens and we'll adjust accordingly. So here's the S&P 500 just floating around at highs, low volume day, same thing across the board for the most part, and I expect that to continue going into tomorrow. It's very typical for Fed announcement, especially with something so severe as them possibly cutting rates for the first time in like 10 and a half years. You got, that's a long time, right? It'd be the second longest stretch on history on record of them holding rates before cutting them. So it could be pretty exciting. We'll find out. We'll see what happens there. Let's take a look at the NASDAQ. You also got the same thing, just holding up near highs. Not a lot of people wanting to make major decisions here. And the Dow, same sort of picture there. The Dow almost got back to positive today. I believe it touched positive at one point. It made an attempt to get there. Procter & Gamble was your leader. They just killed it on earnings there. Good earnings. So big shot to new highs. Got a 4% gain on Procter & Gamble in most people's portfolios if you're sort of broadly invested. Unfortunately, Pfizer is probably in your portfolio as well. Another 6.5% down on the day. That was your sort of your drag on the Dow, if you will. That's day two. And today, basically, they just got downgraded. I think it was two different downgrades today. Morgan Stanley and Merrill both downgraded them on their acquisition there. So that came out yesterday. It's kind of old news. And then McDonald's pulling back. Just sort of interesting, trying to break through the 20-day moving average. It's been a while, right? So a nice, strong uptrend. Just seems like it's trying to breathe a little bit more and pull back just a little bit more. So that's in the Dow. In the NASDAQ, you got biotech, right? If you look at the names in the biotech space, those were your leaders for the most part there. You got Mylan, of course, on their sort of joint venture that was talked about yesterday. You got Allergan, or Algin is how you say it, I guess. So a little bit of a bounce there after being sold off there. And then Vertex, VRTX is the symbol there. All the winners on the day just recovering from a little bit of a sell-off. So if you like biotech, I didn't look at the biotech ETF. I use IBB for that one. Good strong day there, about 1% after, being sort of weak there otherwise. In the NASDAQ, other than that, it was pretty much a mixed bag. I mean, you had just, spread out all over the place, so nothing really exciting there. In the S&P, you're going to have Pfizer. That's going to be your big focus again because of the downgrades there. And then you have Under Armour reporting earnings. A little bit of an overreaction, really. I mean, if you think about it, they beat on earnings, beat on revenue. Guidance was essentially good. They sort of hinted at performance here in the States being a little bit light going forward. That's not worth a 13% decline. I think people saw that early today. That sell-off was a viable one. If you looked at their earnings early, you were just like, what? What am I missing? Why is it down so much? At least that's what I did. Ralph Lauren also sort of hinted at North American weakness there. It tried to rally, but then after those comments, it was pretty much down 4% on the day. The only real good news there was Restoration Hardware, or RH. These guys sell ridiculously overpriced furniture. They raised their guidance going forward for the full year. So they expect people to continue to pay overpriced amounts for a couch that you can just go down the street and get for like 1/8 of the cost. So good for them. That's very impressive. Okay, moving on here. Let's go to the individual sectors. You got home builders here today. I'm going to jump around a little bit. So we talked about home builders fighting to hold on to that 50-day moving average and this general uptrend. That's what you like to see. What happened today? You got about a 2% gain on that one. The main excitement was from Dr. Horton. It's actually called Dr. Horton. See, it says doctor. I just call it Dr. Horton. Anyways, it was a strong day today. It was about a 6% gain on the day. They beat on earnings, beat on revenue. It was the best beat that they've had since 2014, which warrants the sort of move that you see that they had there. They also announced a $1 billion buyback. So another company that is buying back shares of their company at or near highs. Whether you agree or disagree, there you go. Got another $1 billion being bought back. Retail on the day, like I said, that was pretty much focused in just a couple names. Under Armour, a little bit lower. Ralph Lauren, lower, and Restoration Hardware, we covered that. I didn't have anything else to add to that. You had healthcare, a little bit higher, well, a little bit lower on the day, but higher off the lows here. That 50-day moving average continues to be challenged. That's the blue line on my charts there. It had a real chance, right? Today had a chance if you looked across the entire space there, but unfortunately, you just couldn't get it done because of earnings there. Remember yesterday we rattled off all the earnings that were coming out. Well, that was today. So Eli Lilly, just sort of a lackluster earnings report. They beat on revenue, beat on guidance, earnings, and they tried to raise their guidance as well. It just wasn't all that exciting and really didn't move the needle for the healthcare space. And then Merck. There you go. These guys also beat on earnings, revenue, and guidance all in the same shot. Usually very exciting, and it started that way, but the sector itself, everybody is still thinking that sector is still out of favor. They're moving money elsewhere, financials, regionals, things like that. And so because they're moving out of there, you didn't get that focus of attention like we did last week with Facebook and Alphabet and stuff. Everybody was already focused on that sector, communication services. So we don't have everybody focused over here. So just unfortunately not that exciting. And Merck and Eli Lilly make up about 8% of the XLV, so a little bit of a drag there. Pfizer, with their big down day, makes up about 7% there. So, that doesn't help either. So just kind of a recipe for a not very exciting day for healthcare, but not horrible, right? Nice pullback here. It's got a little support, so technical traders haven't given up on it. We'll see. Oil, good strong day for oil, energy, oil services, things like that. Very, very strong day. All areas of this kind of corner of the market were supported. There's a report that came out actually at 4:30 Eastern time today on U.S. stockpiles, and we were expecting to see another draw on that. We'll get another update tomorrow as well. But apparently Reuters got their hands on that study a little bit early, and so anyways, the oil had a nice strong day, 2.2%, and you saw the media trying to say, well, it's all this and that and the tensions and drawdowns and what happened in Saudi Arabia and all that. At the end of the day, we just got a sort of a sneak peek into the numbers. I don't know how people don't get in trouble for that. That seems like something I would get in trouble for, but Reuters, that's what it is. Anyways, you got so looking across that area, by the way, XOP has been really beaten down. Oil exploration side of the sector, if you will. So a 5% gain there, really needed it. Oil exploration's been really weak. And in fact, hey, by the way, the two names that have been hitting 52-week lows for 2 weeks in a row now, 3 weeks in a row now, great rallies. You got a 15% rally on Southwestern Energy. Those were the ones we were picking on, saying how they just every day they were hitting new lows. And then Cimarex also, 6% gain on the day. So just goes to show they came for everything as a whole today. It's a good sign. I mean, not these two stocks. I'm not saying to go buy those, but it's a good sign if you see such a broad-based rally. You got Cabot Oil, remember them from the other day? Even they got a little rally of 1%. They just broke the new lows. And Apache, nope, that's not going to be that one. We want to look at Apache. They were the other one. Apache with the 3% gain. They just hit 52-week lows just yesterday. All right, couple things. 52-week highs. Let's take a look at them. You had 29 of them today. Most obvious one that stuck out to me was Echo Labs. We talked about this being a breakout yesterday, how it was trying. Today was the official breakout. There's your stamp. There's your picture to print if you are a technical trader. Series of higher lows, equal highs at the same time, and the breakout above that on higher volume. There's your breakout strategy for you, all in just a couple words. So that looked really good there. And then you had Hasbro as well. This is a good study on extended in the short and long term. So we pointed this out yesterday. Hit 52-week highs. I gave you the warning sign, right? To say, look, this is not the one you want to chase. You want to learn from this one, but you don't want to chase this one. Get it? It's very great and strong and everything. You saw that today. It tried to perk up there, people buying the 52-week highs, and then it started to fade away. It's because it's extended. It's a great one to sort of learn from. Just a great one to learn from. I don't know how else to say it. So I just like pointing these things out. I'm not telling you to buy or sell or anything. First Energy, also with a good, I guess it was flat by the end of the day. Still working on this breakout. This is not a very popular stock, to be honest with you, so it's kind of a slow mover anyways. And then NiSource, or however you say that, also working on the breakout there. No fireworks just yet. Okay, other than that, you had Beyond Meats, right? We talked about them reporting earnings. They were still down on the day, lost 12%. Does it matter, really? Like, if you invested in this thing along the way, I know I've beaten up on them a little bit, but does it matter if you lose 12% after such a strong gain? Maybe you're all right with that. Could have been a much worse day, I guess, but down 12% on earnings. They lost a little bit more than expected, that's... Well, they lost a lot more than expected. They were expected to lose 8 cents a share. They lost 24 cents. And they had higher revenues as well. But a lot of people focused on the growth outlook there, so I understand that one. Totally acceptable. I mean, the people invest in that thing. Hey, I want to point this out. Our Russell, Did you guys see the Russell today? I was so excited. I looked at this a couple times today. I was like, did it go back down? Didn't go back down? No, it's still up. Okay, good. The Russell 2000 actually closing at highs. Great reversal day. Adds 1% on the day when the markets are basically flat to lower. And you've got sort of a, today would be that confirmation to say, okay, this chop is now over, right? And I don't say that. I don't just come out and like volunteer things like that. But this is that technical pattern where you go, okay, based on what happened today and over the last few days, traders are now going to have this on their radar. People that have been waiting to be in the Russell 2000 are going to be paying closer attention now. People that have been holding, wanting to add more, or just been sort of out of favor with this sector, this should attract that attention. So a really good sign there for the Russell 2000. Now watch what happens tomorrow. Watch, of course I say that and the Fed does something crazy and then it just totally reverses. But anyways, very good sign for the Russell. I'm very happy with them for that finally, because it seems like they're trying to work their way out of there. If you have a broad-based portfolio, or if you have this in your 401k or any of the funds here, it's struggled, right? It hasn't really performed as well as the other ones there. So we've been cheering this one to try to move a little bit higher. All right, let's move on to earnings here. You got Apple in the news with their earnings. Here we go. Everybody focused on Apple today. They beat on earnings, beat on revenue. They guided higher in the fourth quarter, which is important, right? It's the holiday season. So they guided higher significantly, actually, by about $3 billion, if you happen to pay attention to that. They also guided higher for their services, right? So services came in a little bit light today. Yeah, services missed the mark, which a lot of people are looking at that. But in general, guiding forward, they expect that to be higher than expectations as well. So that's good, right? No real complaints there. The stock's higher by about 4% after hours. So in general, just a good report from Apple, sort of a lower volatility report. And I believe they have a credit card or something coming out. I missed it. I don't know. They're working on that card where they, you can charge, credit card with their thing there. So we'll see. Electronic Arts reported earnings, beat on revenue. Overall, good stock movement there. The stock guided higher as well. That's in the space, the gaming space. We happen to follow that sort of thing. A lot of focus on the different games. I don't really get into it. Amgen, a little bit higher during the day. They beat on earnings here after hour. If you follow this area, this is now twice in a row that they've beat the highest analyst expectations. So there may be a handful of analysts, maybe 12, 15 analysts that cover any individual stock. The more popular they are, the more analysts that cover it. Anyways, Amgen, what you have is analysts that go to Amgen, they meet with them, they talk with them, and then they come back, they crunch some numbers, and they go, we expect Amgen to post this number. Another analyst says, we expect Amgen to post a number slightly higher than that. Another one, slightly higher or slightly lower, whatever. Amgen has now beat the highest expectation for the last 2 quarters. What you see on TV or what you see reported to you, like with Beyond Meats when they say they were supposed to lose 8 cents, that's the average estimate. That's not like one analyst estimate. That's all of them put together, averaged together, and they go, okay, well, they lost 24 cents. They were expected to lose 8. Well, with Amgen, they beat the highest analyst expectations now. That's 2 times in a row. So that's sort of something to be celebrated there. I mean, I don't follow this area all that much, but happen to catch that. And good for them, right? So stock price is higher by about 2.5% on the day, after hours, of course, higher there. All right, you got Mondelez. They make Oreos, Chips Ahoy, all that good stuff. They beat on earnings, beat on revenue. They caught me snacking, man. They caught me snacking because they beat on earnings, beat on revenue. They're guiding higher. Stock's higher by about 1%. It's a pretty stable moving stock. It's not normally known to be very volatile. So looks like it's going to end up back near these highs tomorrow. We'll see. Conference call is just getting started, so anything's possible after that. AMD. Oh, can't type it. Well, use that same sound effect for AMD because they reported earnings and it was sort of flat. It just, when everybody else is standing out from their earnings here and you report that your earnings are flat, revenue beat a little bit, guided a little bit lower, they're not as excited going forward, that's not a good thing, right? For the most part, this earnings season has been really good, right? It's just, most people wouldn't complain. So the stock's lower by about 4%, around 32.50 is where it's trading. It's not horrible. It's just it looks like it's going to start a little bit lower today or tomorrow. So not a big deal there. And tomorrow, we've got earnings here, and then I'll take your questions if you have any. You got earnings from the CME Group, General Electric, Humana, Spotify, that'll be exciting, Johnson Controls, if you follow that category, Molson Coors, if you like beer, Occidental Petroleum, QCOM, Sprint, and Lam Research in the semiconductor space there. So today is the halfway mark, by the way. So if you're like, I can't take all this stuff, he's mentioning 1 million stocks, he's going 1 million miles an hour, well, it's earnings season. So we're halfway through it as of today. This is the line in the sand for halfway. And really what happens is for like the next 8 days, 8 market days, yeah, it's kind of exciting, but it tapers off, and then we pretty much just float away and get into some retail stocks and stuff. But other than that, it gets really quiet. So there you go. You meant to sell Tesla and you accidentally bought. So today was your first day trade. I've been there. Yep, I've been there and done that with, we'll just say a significant amount of money making that mistake and watch the stock go because of the accidental mistake I made. And then you have to figure out how to get out, right? Because you can't just sell and make the stock go back down. So then you have to get creative. Some of the loss of the hair is due to that one trade in particular that I'll never forget. Cool. Silver looks overextended. Yeah, so, well, it had a great run. So everything was great in silver. It was very exciting for a few days. Still overextended. It's nice that it's just sitting sideways and not pulling back. So very much a Fed pending sort of movement on the chart there. Yeah, you did well on your Tesla trade, right? So even if you messed up, it had a decent day today, almost 3% gain on the day, still recovering from the earnings, of course, but not bad. Yep. Oops, sorry. When a company announces a share buyback, they usually only announce the dollar amount. Do they do the shares from the outstanding of the float or how? Yeah, you can get geeky. You can look into it really if you want to. The headline numbers are always the hundreds of millions or the billions, but you can actually dig into it, whether they've already done it or not. They'll talk about the shares. The other day we talked about who was doing the buyback there? Sorry, it was Beyond Meats. They were issuing more shares. They did it. They announced both, of course, the amount and then the dollar amount that they were issuing. Works the same way in reverse there, if you like. You just go on your platform, dial up the stock, and then look up the news if you're really into it. You think Ford will continue to pay a high dividend? They're paying over 7% right now. I was going to do a video on this actually because if you look at the higher dividend stocks and then put them in a basket and then look at the non-dividend paying sort of growth stocks, put them in a basket, there's a real discrepancy there. I was thinking about going through something like that. But in general, do you think Ford will continue to pay? Yep. They have a long history of doing so. It may not be the 7% forever. Now, or the 6 and, where are they at? 6 and whatever. It may not be that forever, but they will. They'll always be that high dividend paying stock. Even through, I think, the 2008 sort of downturn, they froze it for a little bit, but they were still kicking it out. Yeah. What comments from the Fed do you think will make a market drop or rise and the volatility be super high? Volatility will be super high in the afternoon at 2 p.m. and so on, really for about 35, 40 minutes in that little window there. People are going to be looking for comments about what they do going forward. If we all have our minds, you notice how the Fed does that? We all have our minds really wrapped around, okay, they're going to cut rates, it'll be fine, that's okay. We've all accepted that. So if they cut rates, that's not a shocker. You don't expect a lot one way or the other. What we look for is for them to say, is this just like a sort of insurance cut? Or are they thinking that they see some kind of weakness that they need to cut more in the future? So if they say things like that, that's a warning sign, right? That's a bit of a negative thing. If they go, hey, we just, the market's just, we didn't quite get what we were looking for out of the economy. We're going to just pull back a little bit. We maybe got a little ahead of themselves. He'll use one key word a lot of times, and everybody will focus on that one word. We'll do it together. But aside from that, then, it's really the focus on going forward there. Yeah. You're up about 15% on Apple. Should you take your profits and go? Should have a plan for that. Did a class on this one now. I can't tell you when to take your profits or how to take your profits, but when you entered the trade, you had something in mind. You should always start a trade with a goal and an amount that you want to lose, right? Because you're going to lose on some, and that's fine. But what's the goal? And when you get to that goal, what are you going to do? Are you going to sell half your position? You're going to sell all of it? You got to have that ahead of time, because now what you're doing is you're going, I've got a 15% profit on Apple. Wow, that was exciting. Think of what I could do with that money. And you are not thinking in a term of offense, you're thinking in terms of defense. What if the conference call here a little bit as it's going on, stock falls a little bit, right? Now you're all of a sudden going to be more emotional. You wouldn't have been emotional had you known what you were shooting for. So careful there, right? Just make sure you always have something there in terms of what you're going to do. And then you never have to ask that question to either yourself or anybody else. But very, very helpful there. Yeah. You're waiting for some kind of waterfall drop on Boeing. Well, that's tough. That's a big stock to have one of those waterfall drops back in, well, was it back in December? Did you even get close? No, not really. You get really short spurts on that one. That's a difficult one to wait for. I applaud your effort, though, in wanting to buy that discount, but you might be waiting a little bit. That's a tough one. Yep. It helps if it's a lower volume stock, by the way. You know, this is not. Thoughts about the banks and how the Fed could affect them? Yeah, no real like immediate sort of effect. Banks would have already priced that in. Those guys are literally the smartest people in the room. They would already have a heads up on that. As far as how people handle financial stocks and what they choose to do with that, a quarter point doesn't do much of anything. Rates are a little bit higher. Banks are starting to lend at higher rates. Their rates are higher, you know, for loans and things like that. So it's really not going to really take too much off the overall bottom line in the long term. I don't think it makes much of a difference. Yeah. Cool. Oh, you got fundamentals. Yeah, that's okay. If you're an investor, that's what you focus on. I realize there's got to be people here that are both technical in nature and those of you that are more long-term. And so that makes it tough to sort of answer back some questions every now and then, but nothing wrong with either or. They always say fundamentals tell you why you would want to buy something, what gets you excited about it, and technicals, or the charts that we show, would tell you, or at least suggest to you, when you may want to buy it. So you have the why and you have the when. If you're like a fundamental long-term investor, you might use fundamentals to find a stock that you think is going to do well as a business. You think it's just going to grow, but that doesn't mean you're going to buy it like Hasbro. Doesn't mean you're going to buy it at those highs. You may use a chart to then say, all right, I'm going to let it cool down a little bit. So combination of the two, I'm a big fan of. I think most people do that anyways, right? Yeah. All right, cool. You like your Caterpillar? We're going to include that in our, got a cool lesson for our customers there Thursday night in our portfolio review about Caterpillar, because that's something we don't spend a lot of time on talking here, but really important stock, by the way. There's a lot you can learn from that you can't learn from economic indicators. So I won't bore you guys to death, but I'll cover that on Thursday. There you go. Last question here. Thoughts on Bank of America? What drove the price back up on Bank of America? In general, you got money moving into financials. This is yet another sign. If you happen to watch what we've been talking about here, is yet another sign where people are wanting to buy financials. And it's not my opinion. It's not a belief or some magical chart pattern or whatever. You're just looking at it and you're seeing more and more money come into it. Here's a great one. Stock gapped lower, wanted to take a break, and buyers said, good enough for me. I want to get back in. And not just like me and you buyers, like big money moving out of other areas of the market. So I maintain that financials being undervalued or having been undervalued, man, you can see it. People want to be a part about this, or people want to be a part of the financials. Okay, that's all I have for you there. We'll be back tomorrow, of course. I appreciate you guys watching. Hope you had an interesting time, maybe learned something there. We'll get through earnings, and then, of course, the show will get back to sort of normal here. But yeah, a lot to cover every single day. I mentioned tomorrow, as far as the exciting ones everybody is focused on, it'll just be Qualcomm, maybe Sprint, but not so much anymore because of their approval there to the merger, and Spotify as well, because remember, that's a different share class. So that's not a typical normal stock where you have voting rights and everything. That one's a little bit different, so they get treated a little bit rougher when it comes to that. And of course, General Electric, that'll be one to watch as well. All right, I will wrap it up there. You guys have a great rest of your day, and we'll talk to you soon. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.